Shoo. Good morning. Happy hump day. Happy Wednesday. I'm really looking forward to getting on quickly and hitting a couple topics and getting on with our day. Here, I've been listening to, I was listening to a podcast this morning, and it was a brilliant podcast. And the person being interviewed on the podcast was asked a couple of questions, and one is, should I advise my clients to wait advise your clients to wait to refinance because rates are going to continue to improve, or should you refinance them right away? And this is the second time I've heard this question asked. I think I was on another podcast. I heard Jeremy Forcier and answer this question, and he answered it brilliantly, as did the person I was listening to today. And the answer is no, you shouldn't wait. What are you waiting for? We don't know if rates are going to improve. If you remember, a year and a half ago, we were told that on May 10th, rates would start to plummet. That didn't happen. And then at the beginning of this year, we were told that rates were going to be cut 6 times. That didn't happen. So we don't really know. While we expect rates to be cut somewhere between 50 and 100 basis points this year, and next year another 100 to 150 basis points, that's what we expect. But we've been proven repeatedly wrong. How would you like to advise your clients, hey, wait, look, they're going to get better, let's wait, and then they don't get better. And then your client lost the opportunity of the benefit of the refi today. On average, most borrowers most borrowers that are in the money to refi can improve their interest rate by at least $264 a month. Can improve their monthly payment by $264. And now with rates getting better, that's probably higher. It's probably over $300. So the people that are in the money can improve their monthly payment by at least $300. Many of them much more. Many much more, especially with higher loan amounts. Might be $500, $600, $700, $1,000 a month. I wouldn't want to advise that client to wait. I am so knowledgeable. I am so certain where rates are going. Now I know I've been wrong for the last 18 months. I know I've been totally wrong. Believe me now, they're going to get better. I don't believe that. I believe you should refi people that it will benefit to refi today. That's the answer. And by the way, that's the answer that both Jeremy and this other person gave. They gave the answer, no, I need to manage their mortgage and let them, realize the opportunity now. Plus, what if they lose their job? What if they have a late payment? Like, what if they don't qualify? And I wait, and now they can no longer do it. Instead, we should be suggesting to our clients, look, this might be a 2-step refi or a 3-step refi. We may refi you today where you get the benefit of saving $800 a month, and then in 12 months, do it again, only because it makes sense. But let's make sure that you capture the opportunity now. So I totally agree with that. Totally agree with that. Here's what happened on the podcast I was listening to today, though. Later in the podcast, the same person was asked, well, what happens if it creates an EPO? And the person responded by giving a script on why that person should wait. I didn't understand that. If it's good for the client to refi, if we're advising all of our clients they should refi now so they don't miss the opportunity, and if the opportunity improves, we should do it again later. If that's our stance, then how do we tell the borrower who it creates an EPO not to do it? How do we argue it's good for 90% of my clients or 95% of my clients, but it's bad for those 5% of the client because it harms me? And I just think that's just a huge problem. I think we should always put our client's interests first and do what's right for the client every time, whether it hurts us or not. And when we put our own self-interest in front of the client, we're just transactional. We're a commodity. That's all we are. Where I would urge, and I continue to urge, in these lives, that we need to get a 30-year plan. We need to get a 30-year commitment to serve our clients. And if we think that we're going to serve our clients over 30 years, and we can estimate that over those 30 years that they're either going to do with us or refer us around somewhere between 16 and 20 transactions in those 30 years from their own, from their families, from their friends, right? That we're going to get, somewhere between, say, 15 and 20 transactions, then I shouldn't worry if this next transaction harms me. I shouldn't worry if I don't make a commission on it, or if I have to pay back a commission. I shouldn't worry about that because I have a 30-year game plan. I'm going to harvest this relationship for 30 years, and the only way I harvest it is if I take care of it. And taking care of it starts with doing the right thing for the homeowner and for the borrower. And you can't say it's the right thing if you advise 95% of your clients to do one thing, yet this small percentage of your clients to do something else. If you're doing that, then you know it's not the right thing for the client, in my opinion. And so you should always do the right thing, even if it creates an EPO, because you have a 30-year game plan on how you're going to harvest 20 transactions from this person. And you're going to do it by taking care of them, and they're going to reciprocate by, giving you more business and referring you business. That's the answer. Now, here's the thing on the EPO. Everybody hates EPOs, but you know what? Everybody hates it because when you have an EPO, the lender has to pay back all of the revenue on the loan, and and loan officers oftentimes don't understand what the revenue is. The revenue is anything above par pricing. Anything above par pricing. And so if you put your commission, if you price it into the loan, right, which means you slightly raise the rate, well, that's above par. You got to pay it back. So are loan level pricing adjustments, by the way. If you know you're going to have if you know your client's going to pay the loan off early, then you should charge origination and you should charge the LLPAs directly to the borrower so that you don't have to pay them back. So your company actually has a hefty penalty. And then there's other problems when you have EPOs. But what companies do, here's what happens. They pay a commission out on a loan before the commission is actually earned, because a loan officer doesn't earn the commission until the loan has been, until the loan has met the covenants, which include aging, right? Whether it's 4 months or 6 months, that includes it. And so companies advance the commission saying, hey, look, this loan's going to perform, but if it doesn't, you got to pay us back the commission, because we're going to have to pay back the investor that sold us the loan with penalties and the LLPAs, by the way, right? And then loan officers get really upset when they have to pay back their commission. I understand. Companies don't like having to pay EPOs. They can be $20,000, $30,000, $40,000. Branches don't like seeing EPOs hit their P&Ls. It can destroy a P&L. 1 or 2 EPOs a month can completely, sabotage a P&L. Nobody likes them. That being said, we got to do the right thing. You got to do the right thing for the client. You got to make a 30-year investment in the client, not a transactional investment in the client. Another thing is, a lot of times people, slow play a loan. The borrower, you might have financed them in at 6.5, and the market's at 6 right now, and they're ripe for a refi, and you're going to slow play it. What you really risk is losing the client and losing the loan. Like, the very worst thing that can happen is like here's what a good thing that happens is the loan performs and you don't have an EPO. The next best thing is it's the benefit for the homeowner to refinance, and that we're going to handle the refinance, because at least the income from the refinance is going to partially fill the loss from the original purchase or the last loan. Right now, typically the revenue on a refinance isn't going to be as high as the revenue on a purchase, because you're probably going to have to discount it a little bit. And the loan amount may not be as large, so the revenue might be slightly smaller, so it won't quite cover the loss, but it will cover a lot of the loss. The very worst thing that can happen is we do a transaction for a client, and then they go do a refinance with a competitor, so we get all the EPO penalties, we lose the client, and we get no offsetting revenue. Like, that's the very worst thing that can happen. So make sure you take care of the client. Understand your company's EPO policies. They differ by companies. A company has a choice on how they sell a loan. They can sell a loan that comes with a 6-month covenant. They can sell a loan that comes with a 4-month covenant. They can sell a loan with the 0 covenant. The reason why they don't do the 0, seasoning covenant is because they get paid less on the loan. And so you could have it, your company could have it, just know your rates would be an 1/8 point, 1/4 point higher. Instead, they go, no, we'll take that covenant, and then we'll pay back the revenue if it fails. But know what your company is. If your company is servicing the loan, they're going to be much more aggressive about having you refi it, probably have fewer penalties. Maybe they have restricted comp on it. But know your EPO rules and always do the right thing for the client. And if you're explaining, like this person this morning said, I'm going to treat this part of my book of business one way and this part of my book of business another way, recognize that right there is a red flag. It's a red flag that you may not be doing the right thing. Because if the only answer is the reason why I'm doing this way for these people is because it's the best advice for them, the reason why I'm suggesting this advice for these people because it's the best thing for me, that's a problem. Just do the right thing. Even if it hurts you, do the right thing. Refinance your client if it benefits them. Refinance them now. Don't have them wait. I'm a huge believer. Let them realize the opportunity now. And if the market blesses us that it improves enough for them to do it a second time, help them a second time. Totally good. Totally good. Anyway, that's my word today. I just, we cannot get so wrapped up on how something impacts us that we don't do the right thing for our clients. When we don't do the right thing for our clients, that will impact our business over time. It's just not a way to have a healthy business over time. And when people know that you do the right thing, even if it costs you, that makes you that much more valuable in your relationship, that much better. So thankfully, it looks like rates are coming down. Thankfully, we're gonna have a little bit of a little refi pickup. We're gonna pick up and purchase business. And if you do the right thing, you'll keep being able to do this. I hope you have a great day. Happy hunting out there. I look forward to seeing you again soon. Thanks. Bye.